What's up traders, welcome to Failure to Displace. In this video we're going to take a look at this morning's London session on pound USD, where I took this 2-hour trade entry. Although I have realised in creating this video I made a small error. My entry was on a mitigation block, not a breaker block. So this wasn't an official unicorn model, which is what I'm supposed to be trading. So let's jump into the analysis now and see how this profitable trade for me was actually entered incorrectly. Before we jump into the analysis, let's just run over the 2024 trading plan again, just to clarify exactly what we're looking for. So first we're going to establish our daily bias. We're going to be looking at where price is delivering from. Are we moving from internal liquidity to external liquidity, or vice versa? Meaning, are we moving from a fair value gap to a swing high or swing low, or are we moving from a swing high, swing low, where we've taken liquidity, to an internal level of liquidity, such as a fair value gap? Once we've established our daily bias, we're going on to the 1 hour time frame, looking for our 1 hour points of interest. This is going to be marking out swing highs and swing lows on the hourly chart and highlighting PD arrays such as fair value gaps and order blocks. And then when our price enters our points of interest, we're going to be dropping to the 5-minute time frame, looking for a 5-minute unicorn entry. Obviously, we're going to be trading the London session, 2 AM till 5 AM. If we don't find a trade in London, we will move to New York, 8 AM till 11 AM to look for our potential entry. I'm only going to take 1 trade per day, whether that be a win or a loss. After that single trade's taken, I'm out for the day. I'm not trading during red news, but if we do have red news, I will trade after the red news, hoping that it will act as a catalyst to the trade idea. The stop loss is going to include 3 PD arrays plus my spread. The take profit is going to be a fixed 1 to 2 RR with no trade management. So I'm not adjusting stop loss, I'm not moving to break even, and I'm not taking profits. It's just a fixed 1 to 2 RR. This is to make the system as mechanical as possible and remove any discretion on my part. We're going to be trading EU and GU in London. If we don't find a trade in London, we'll move to the New York session where we'll be looking at the NASDAQ. So that's the trading plan. We're going to jump into now the GU trade that we took this morning. So here we are on the current pound USD chart, and we are going to establish our daily bias for the day. So the first thing that I'm noting is we have swept liquidity. So the last point of interest was this daily low, where we have now swept liquidity and pulled back into the range. So having taken one level of liquidity, one side of the range, our eyes should be drawn to the next level of liquidity. I'm just going to remove that indicator, so ignore those red lines. We've swept these lows. We are now pulling back into the range, so our eyes should be drawn to here as buy side liquidity. We don't have any inefficiencies in this price run. The only inefficiency that we've got was this bearish fair value gap, which has now been traded through. So this should have acted as resistance. We traded straight through this, so now this fair value gap should flip to support and act as an inversion fair value gap, which you can see price has traded through and then tested the top of the inversion fair value gap 3 times now, supporting the idea that we may be going higher. We do have relative equal highs here as well for buy side liquidity. So again, as another potential draw on liquidity, we do have some swing highs here, which we could be drawing up to. So this gives us our bullish bias. Essentially, we have taken external liquidity. We've got an inversion fair value gap supporting price at the moment. So we are going to be looking for a sweep of liquidity on the opposite side of the range in this instance, expecting price to drive up, potentially take out these equal highs. The daily bias is bullish, meaning we're only going to be looking for longs in the session. Let's drop to the hourly time frame now and see what we can find. So here we are on the hourly chart. We can see this is our daily inversion fair value gap, and we are currently sitting at consequent encroachment of that fair value gap. We've just swept an hourly swing low prior to the London open at 2 AM. So this down closed candle here, this displacement candle, is the 1 AM candle. The next hour will open up being our start of the London session. Now we have a swing high up here, which is the top of the Asia session, and also a smaller swing high at this point. So we've swept previous day's low here, So this is yesterday's low that we've just taken out. We have a bullish bias, so we would be expecting yesterday's high to get taken. We can see that we've built quite a lot of liquidity up at this area, 1, 2, 3, plus that previous daily high just above us as well. So that would be a really strong draw on liquidity. Lots of relative equal highs up here. Quite nice price delivery on the way down. So our only inefficiency is this fair value gap put in yesterday. So that's a 1 hour fair value gap, and we do have a swing high inside that fair value gap. There's buy side liquidity, and then we have the New York session high as well. As buy side. So there's our targets. We have just swept liquidity already. Let's drop onto the 5-minute time frame now and see if we get offered our unicorn model then. So here we are on the 5-minute time frame now, ready to start our session, and let's see what we've got. So I have realized in taking this entry while I'm creating this video and documenting the trade, I actually made a mistake on this. I had this here marked as our breaker block. In hindsight, now I've got a little bit more time to analyze this. This is actually, although it's an order block at the moment, this would be a mitigation block when it gets traded through. For an official breaker block, we need a swing high to be created before a swing low is taken out, which is up here. So if we can look at this price action, we created a swing low, we created a swing high, swing low, we've took out the swing high liquidity at this point here, and then traded lower. So this is the last up closed candle with the highest close. It took out liquidity before trading lower. This is our breaker block. So this order block here is the one that we should have been analyzing to take the trade off for a confirmed unicorn model. So let's scroll through price action now, see how this played out. Obviously my entry did play out really nicely, but it isn't an official unicorn entry. So we scroll through, we can see straight into the session. So coming into 2 AM, get a large displacement candle closing over this bearish fair value gap. So as we've closed over this bearish fair value gap, we can look for this to act as support now. It should have been resistance to drive price lower. It will now potentially act as an inversion fair value gap where it will act as support to move price higher. So this is our sweep of liquidity, taking out yesterday's low. And then we have a really nice reversal. Inversion fair value gap going to potentially act as support to move price higher through this order block. Price comes back, retests the inversion fair value gap at consequent encroachment. So that little dotted line there is 50% of the inversion fair value gap. Held price really nicely, and then we get a rejection coming away. Inside this area we've left a bullish fair value gap, so we do have now a balanced price range at the lower end of the inversion fair value gap. So balanced price range is where we have a bearish fair value gap followed by a bullish fair value gap where the two overlap. This is an inefficient area classed as a balanced price range. If price does retest that area, we can generally expect a strong reaction from that zone. So we're building support here. Price trades down, taps the balanced price range, so it's rebalanced this area, and we can see a strong reaction at that point. Again, still respecting, so the body close is respecting above the 50% of the inversion fair value gap. Again, tap of the top of the balanced price range, so retest of that area, and then moving into this order block area, closing through a couple of fair value gaps here, and then strong displacement through the order block. So this is what I marked as our breaker block. However, in hindsight, this is actually a mitigation block, so I did that wrong in live time. So we now have a mitigation block. We have failed bearish PD arrays, so these could potentially be flipping to support. Inversion fair value gap. Inside. Another inversion fair value gap. Getting closed through here. Bullish fair value gap at the bottom. So we can see bearish PD arrays have been disrespected. We're leaving bullish PD arrays behind us to potentially act as support. We've traded through with displacement, breaking structure. So we've got a full array of PD arrays below us now to support the thesis that we will be going higher. The entry that I took was at the top of the mitigation block. And then I was looking at 3 PD arrays to act as support. So obviously mitigation block is a 1 PD array. We have an order block down here. I'll just highlight that because I did use that for my stop loss placement. We have the inversion fair value gap inside, so I used this inversion fair value gap as my second PD array. The higher fair value gap, inversion fair value gap, I didn't give significant attention to this because we did trade into this once already. So I was looking at this inversion fair value gap, the bullish fair value gap, and the order block as well. So I thought a logical place would be to place my stop loss below the order block. Again, we've had the balanced price range acting as supports already, so if we do come back down that way, then the trade idea is wrong. So we've got more than 3 PD arrays there acting as support. Fixed 2R for our take profit. And that was the setup. So this is not an official unicorn entry. We're taking this off a mitigation block. If we're going to take a unicorn, we need to see displacement through this order block, because this is the order block that swept liquidity before breaking lower, taking out sell side here. So this is my official entry. We'll also monitor what happens for the unicorn as we go through this price action. So we get tagged in. Again, really important, monitoring 50% of these PD arrays. Price comes down into the mitigation block, taps 50% more or less perfectly, just the top of this inversion fair value gap. We'll get a nice rejection. We've currently got this bearish fair value gap holding us down. Closure through 50% of this bearish fair value gap. This gives me some optimism that we're going to go higher. Strong displacement through that level into this order block. So again, 50% of this order block now is being respected. We do have this bearish fair value gap, which has failed. Potentially this will act as support now, an inversion fair value gap to move price higher. Come back, we retest the inversion fair value gap with a closure through it. Large engulfing candle, not an engulfing candle actually on the close. So a large bullish candle taking us back into the order block. Kind of hovering around this inversion fair value gap at the minute. So we want to see a fair value gap and closure through this level. Strong body close with displacement through this level for a confirmed unicorn entry. There's a strong bullish engulfing candle. And there is another strong bullish engulfing candle closing through this level of liquidity and closing through the order block. So this now will flip to a breaker block to potentially act as support. In order to confirm this as a unicorn, we want to see a fair value gap inside that breaker block. There is our fair value gap. So price comes back, retests 50%. Small fair value gap. I would still take that as a unicorn because we do have a fair value gap with the big displacement candles through the breaker block. So your entry would be a tap of the top of the breaker block. We need 3 PD arrays to act as our stop loss placement. So we would have to have the fair value gap, the breaker block, and then these 2 down closed candles here are an order block. So these are a bullish order block, which means stop loss for the unicorn would require an 8 pip stop loss. 2R will take us just above the Asia high. So it doesn't actually get tagged in at this point. So the unicorn doesn't get entered So we'll stick with the mitigation block. We have a hit TP on the first entry off the mitigation block. The breaker block after creating the fair value gap was not retested. So there's no entry on the unicorn model. Price does go to sweep out the Asia high, however. So really, really good move. Swept one side of the range, sweeping the other side. This is a potential now, if we do have our bullish bias correct, to run for those higher prices that we highlighted. So this is one of those, if you were doing different trade management, you could be potentially holding runners now on this for much higher prices. Up to current price, we can see we are displacing higher quite nicely through the range. So I hope you found that useful. A bit of a mistake on my part, marking out the mitigation block as a breaker block when I actually took my entry, although paid off in this instance. I suppose the supporting thesis for this is we did have displacement. We were closing through bearish PD arrays. We had 3 PD arrays to support the trade idea, and we had swept previous day's low. So there was a lot going in favor of that trade. Just on my part, not fully marking out the breaker block correctly. It led to an entry which paid off in the end, and if I had waited for this structure to get taken, then I wouldn't have had the entry on there. So overall, positive, profitable morning for me. I hope you enjoyed the video. I hope this breakdown was useful so you can see the mistake that I made. Again, I'm not perfect. I'm still learning just like everybody else. Always trying to improve. If you did like the video, please leave it a thumbs up. If you have any feedback or comments, please leave them down in the comments section. It'd be great to hear your thoughts. And likewise, if you're enjoying the content and want to see more analysis like this moving through 2024, please consider subscribing. It'd be great to have you on board. So thanks for watching. I'll see you again in the next video.